Happy New Year all. Ira Epstein, and here we are, December 31st, 2024, your financial market wrap up. And it is Tuesday evening. All right, so again, I want to thank one and all for being regular viewers, or if you're a first time, for joining us. I think you'll find what we do interesting. We review the markets in a very certain way. This is definitely a feeder into the research that I have that you have to be a paid subscriber to get to. But it gives a lot of information, and we attract a good viewership on it. Now, by the way, in this, I cannot say by law, I want you to buy here, sell there, do this, here's that. I have to talk generalities because anybody can see this. If this were the paid subscription, you need a user ID and password to get in. I'm then protected, and believe me, if you see my personality, I am not bashful. I will have losers, I will have winners. It goes both ways. Name of the game is controlling the losers, trying to let the winners run, and being more right than wrong. That's what trading is all about. Investing is a very different game than trading. Commodities are typically set up for trading. ETFs you can invest with because just think, the contracts all expire one after the other on you, and the leverage is phenomenal. It's 90%. That's a good and a bad thing. We're going to get tomorrow, be it Thursday, the next trading day. You're not open on Wednesday. You actually open Wednesday at 5 p.m. Central Time in many of the CME Group's markets. So you're going to open the stock indices, the currency markets, the bonds, the notes, all that will reopen. The grains, the meats won't. The soft markets will open later in the evening from the ICE exchange. So by Thursday morning, when most of you wake up, you'll be having the markets. You're going to get the MBA mortgage numbers. They're going to come out at 6 a.m. Thursday. Jobless claims Thursday at 7:30. S&P Global Group, their final December manufacturing sector PMI at 8:45. Construction spending at 9. The natural gas storage report comes out at 9:30 on Friday. You heard me, Friday. And you will get the EIA petroleum report. I should have had those reversed. And that will be coming out on Thursday, January 2nd. All right? So that one comes out. Isn't it funny to say January 2nd is Thursday? So strange. Before I go into the review with you, I want to remind you, I have a sale that's going on right now. It's my New Year course sale for 2025. It offers, very simply, my full chart course. And you get a free Bollinger Band or outside day. The courses normally run $599.95. I'm selling it for half of that, $299.95, and throwing in addition, the course on either the Bollinger Bands or the outside day. Those by themselves, each one, they cost $120, and they will cost that right as this week ends. Everything goes back up in its value. But because it's the core course, you get 30 days if you haven't been a subscriber or aren't currently a subscriber to my 30-day trial of my complete research. That's the morning videos for my subscribers where I lay out the chart, show you what's going on. I'm recording those in real time, walking you through everything you're learning, doing it in the ETF. As you know, we have special reports that come out now, and they'll come back on. And I'm going to do more seminars this year. So they'll be the Zoom type that we normally do. So they'll be coming right back at you in January. I took off past 3-4 months doing those. I'll bring them back, but I'm going to separate them. I'm going to have one for just futures and one for the spider ETFs. I don't like when you mix match them. I get too many questions that are one-sided, not the other, and it sort of hurts the people that just want one or the other, and that's how I'm going to do it. All right. There's a cursor that will be up here during this. Just give it a click to go to it, or go to iraepstein.com. Can't miss it. And when you get to iraepstein.com, all you need to do is take a look on the left, and you will see, it'll say New Year Charting Course Sale. Give it a click, and away you go. It ends this week, and you won't get this offer again. A lot of you wait for me to give my special offers, and this one's not coming back. It's costing me a bit too much. All right, so as we look at the market, the grains had a pretty good day today, but thin trade, you can push them around fairly easy. The biggest gainers for the year, as it turns out, in commodities were coffee, cocoa, sugar markets. Isn't that fascinating as to what happened? OJ, powerful market, all right? Sugar, not the leader. I said sugar there. It's really the cocoa, the coffee, and the OJ. Those were the big leaders. I think softs, and I always put sugar in. You're holding up nicely in the energies. You gave up half of yesterday's gains in natural gas. I'm not surprised. I was here saying I think it was really thin volume, and the talk of that first vortex of cold weather, both in America and Europe, has got the market spooked. But I think 60 cents was too much of a gain. So let's take a look at where we're at. On the S&P, we're still over the 18-week average of closes, so the bias is up in the market. The market's doing broad swings, just what my hand's doing here. This is what you're doing right now. And we didn't get the Santa Claus rally. Santa did not come for Christmas. He might be here through January 2nd, I don't know, but doesn't matter. The market has gained 24% in the S&P for the year. So does it really matter in the last 5 days or 6 days of the year if you get a rally or not? Probably not. Did anything materially change in terms of fundamentals so far? They're about to. You're going to have Trump. That's a huge change from Biden. So they're about to change, and there's an element of uncertainty that is setting in because of that. The positive, when he won the election and carried the market up, that wore itself out. Now you're into the reality. What does a tariff really mean? Who's going to get tariffed? What do I do? What does it do to supply chains? Those are the things that are coming into the market. Once the market rolled under the 18-day average of closes, the red line, it stayed there. That gave the market a downside bias. There were two objectives for the market at first, possibly getting to the 100-day average or the 200, but the third would be a Bollinger Band. And Bollinger Bands were hit here. You got under them. You didn't stay under very long. You rallied back to the 18-day average, and now you're settling in, trying to see how low is low on this break. So the Bollinger Band and the 100-day average are the next support. If it let go completely, maybe the 200-day average. I have my doubts about it, but that could happen. Momentum's down. Bias is down. But if you define trend as if in a downtrend having lower highs, lower lows, you don't have that. You have a higher high and a lower low. So no trend in that sequence. Okay, not a perfect world. When you look at the Nasdaq, it's the same play. Momentum down, the bias down as you're over the 18-day average. The support keeps coming in at the lower Bollinger Band. If it gives ground, you might come back here. If the market rallies, I'd look for the resistance. It's at 21,802. Again, you'd have to go back up to this high in order to be on the 2nd of January at the close and past that to get a gain on the Santa Claus rally. It certainly looks like it's too far away. Same thing going to be here as you look at the Dow. That's your 26th. The resistance now is the 100-day average, supports the lower band. It is oversold. It has sold off a lot, but I don't know what's going to happen other than people start plowing back into the stock indices, which would, not the indices as much as the individual stocks. And you know what made up the Nasdaq gains this year and what's helped the Dow? It's the Mag 7s that are included. When you strip them out, you didn't have a market like this. When you have them in, that masked many of the things going on. The Russell's game is real simple this year. I don't think it does what the pros that are saying this is the place to be unless and until, two different parts, interest rates break and they show that they're headed down. That could bring this market alive. Any other reason? I don't see it. So if you were to say if I have to focus on one thing for this market, I think it's interest rates. When I take a look at the 10-year notes and the bonds, as much as you try to rally, as long as you keep the embedded reading, just what I said yesterday, I think the pros are selling. The same thing is going on here. You closed at 2068, but that's not over 21. So the pros got a reprieve today if they were selling the rally. In the dollar index, the embedded reading, it's still in a bull trend. You hit a resistance point called a window envelope. I'm not going to go into that here, but you will learn them in my core charting course, and that's why I think the market stopped today at the 108.38 level. I'm laughing because it was a number I gave the subscribers right on the head this morning and last night. Higher high, lower low. Starting to break down again. New lows here. We hear a lot of talk where members with Ms. Lagarde, well, we shouldn't be cutting rates more. Nonsense. They have to cut rates more. They're worried that inflation's going to stay up. They got to save their economies. So I think they'd rather live with a little more inflation and probably get that done. That's just my opinion. And in the pound, I still think that the pros are building in for this market 2 rate cuts at a minimum in 2025. You know that can change, but that's what I think they're building in. But it's oversold. As we were rallying even yesterday, I said it might want to go back to the 18-day average. Didn't quite do that. And now the question is, with all this noise, is it going to embark and we start the year off where the currencies are weak against the dollar again? In Bitcoin in January, you went from basically the 109 level all the way down to the 91,000 level. I'm just giving them rounding the numbers and big numbers. I thought you could get, and I said it here, and I said it other places, maybe a 20% break, not to buy it. I know I do a lot of interviews on TV, and I said in one of those, no, you don't buy it here. You'll get your opportunity. Well, you're there. When you look at Bitcoin, crude oil, you can see it's coming back up. Now, this is interesting. Why is the big question? Well, maybe it's worried about the crackdown that Trump's going to do on Iran. You know, under Biden sneakily just said, let them ship oil, okay? We'll close our eyes. It brings our prices down. We'll win the elections. It'll help the American economy. There's nothing wrong with saying that. He probably did that. If I were president, I might have done it. You don't know. You don't want American public to feel inflation. In the end, that's what beat him. Is the public still felt the inflation, and he did his best to keep prices down. Well, under Trump, he's got a 4-year window. Now, he only has a 2-year window to help and gather and maintain a bigger lead in Congress. We'll have to see. But I think that's in part what's getting some of these rallies going. The market's getting ready for the Trump impact on all of them as we get into it. But I think this market got ahead of itself. It's that simple. So with that, I'm Ira Epstein. We'll have a lot to talk about come Thursday morning. It'll be back to normal. Enjoy your one day of football. I know it's on right now. A lot of us watching that. I'm Ira. Have a great new year, and I'll catch up with you all Thursday morning. Take care.